In the first episode of Bill Williams' trading strategy, we caught the price where it came short to a key resistance level. Since we are trading live, this episode has a different approach for us, which is the Bill Williams trend following strategy. Let's cut the blah and hit the chart. We are looking at Nasdaq 1-minute chart. First rule is wait for the price to run a liquidity. You guys can see that it happened on this wick. The price closed below the blue line and all three lines has crossed each other. On a pullback, I entered a trade. The second signal, which is very important, is this liquidity sweep happened with a divergence on the chart. The Awesome Oscillator did not make a new high. On the other hand, the price did. We had a sell-off. That's aggression in the market. We don't chase the price. Once Nasdaq returned to the alligator bands, I entered a short position. Entry is very close to the green line. I moved the stop slightly higher. I have 2 micro contracts on. And look, we have one bearish candle in here. I would like to get out 1 micro contract before the market enters this bearish candle. In the previous episodes, I have stated that these bearish candles before a bullish run is a bear trap or an order block. Over here, we can see the price is completely below the jaws, teeth, and lips. Therefore, I can move this stop to break even and secure some profit. We had one liquidity run above $865. Check. We have a divergence between the price and Awesome Oscillator. Rule number 2 is also check. We have it in here. Rule number 3, we wait for the price to either cross the lips or the teeth line, which occurred on this bearish candle. On a return to the red or green, we can enter a short position because we already have the divergence and the liquidity sweep. But I came to my desk a bit late and I managed and I could catch the second pullback to execute 2 micro contracts on Nasdaq. The price is getting very close to our stop level. That's the blue line. Let's wait and see if the jaw line, the blue one, can hold. I can add one more to my short position. If the price returns to the same blue line, that would give me a worse entry, but I have to adjust the stop loss again and move it above the recent highs, only risking $20. There is a wick that shows we have passive sellers. That order is filled. Now our average price is around $834. The blue line is holding. Since I have 3 micro contracts, I would like to exit 1 micro contract at the upper level of this bearish candle, which is in conjunction with this cross. The market became bullish afterward. The first partial is done. The second partial is done. Now I can move this stop above the recent high, which is slightly above the jawline, and see if it can continue lower. Let's look at Awesome Oscillator. We have one low. This low is respected. Now we have a new low, but Awesome Oscillator did not make a new low. This is a divergence that tells us the price can potentially bounce from this area. That divergence occurred right at the last cross. Therefore, maybe it's better if I leave this stop to break even for the new information that we have. If I see Awesome Oscillator makes a new low, I will be more confident. But currently, no. The alligator lines are getting close to each other. This is signal that the trend is getting exhausted. A good trend is where these lines between jaw, teeth, and lips are wide. Here, we don't have that wide jaws, teeth, and lips. The lines are compressing, showing the market is getting exhausted or waiting for a correction. I can move the stop slightly lower above this wick. We are having a bounce from the mean threshold or 50% of the previous cross, which is here. That stop is taken. Let's see if we can find a new opportunity. There is one liquidity above $844. We will wait to see if the price can take that high or not. The price has respected $844 resistance. It's a horizontal line. Let's compare it with the Awesome Oscillator. AO increased higher, but look at the price. From this high to this candle, the peak of Awesome Oscillator, there is a divergence. We can go short, but we have to wait for the price to stabilize below alligator lines. The price closed below the alligator. The divergence has spotted on Awesome Oscillator, as I explained a few seconds ago. Once the trade is active, stop goes above the previous aggressive candle, $836, and we will be targeting 1 to 2. That would be $774. The trade is active. Time to move the stop. The risk is $40. The return should be around $80. We might change these numbers by studying the price action around the alligator and Awesome Oscillator. That's a legit target. Maybe I can add one more sell order at the teeth line and close one of them at these equal lows. The second pending order is active. Stop loss remains the same at the high of the first aggressive candle, getting very close to our stop. But if you know price action, that wouldn't worry me for this specific reason. We have one fair value gap in this portion. Therefore, it's natural for a price to have a pullback or a return to this area. I'd be worried if the price closed above half. The concept behind fair value gaps also explained in the other trading course, which is based on order flow. You can find that in my channel. The first partial is hit. That was 170% of the risk. The second partial, which is the last one, is that these lows would give us a 300% return. Actually, that would give us 450% return of our risk. Now we can minimize the risk because the price is below the alligator and the distance is high. We can move this stop to break even. Meanwhile, if I see a return to the lip line or teeth line, I would like to add to my short position because this liquidity is done. The next one is these equal lows. Easy target for Nasdaq to get there, maybe in the next 15 or 20 minutes. Closed it with $100. The first trade was 170% of the risk, if I'm not mistaken. The second order was around 400% return of the risk that we put on this trade. I hope you guys like this video, but don't worry, we will have more sessions like this to master Bill Williams' strategy. Until next episode, stay safe, stay observant, and always protect your capital with stop loss.